think it's conservative to on track. Again, I'm not worried about these short-term, non-recurring negatives. I'm really focused on the long-term themes. And the thing that's changed more than anything over the last 3 months is the attitude in Washington towards crypto, which again has gone from really caustic to neutral or positive. And I don't think the market has priced that in. So yeah, I think we'll get to $100 billion by the end of 2025. I mean, we might exceed that, given what I'm seeing in the market.
Matt Hougan is the Chief Investment Officer for Bitwise Asset Management, the world's largest Bitcoin index fund provider with over $1.5 billion in assets under management. He is a leading ETF and financial technology specialist. Despite recent price movements and a slight tapering of demand for the approved U.S. spot Bitcoin ETFs, Hougan remains bullish on the ETFs and the ongoing crypto bull market. In one of his recent tweets, Hougan predicts that the U.S. bought Bitcoin ETFs, which have attracted $56 billion in AUM, will reach, at least Hougan told Crypto Nutshell, that $100 billion will be conservative given how far ETFs have come in 6 months. Hougan also discusses the crypto markets and tailwinds that could lead Bitcoin to $100,001 by year's end. The Bitwise CIO says the crypto industry is currently confronting a peculiar dynamic. Everything short-term news is bad. Everything long-term is good. Hougan is optimistic about mid to long-term tailwinds like extraordinary inflows into Bitcoin ETFs, a shift in U.S. politicians and regulators' views on the cryptocurrency industry, and a Federal Reserve rate cut announcement. Hougan predicts that Bitcoin will reach $250,000 in 2025 as tens of billions of dollars pour into Bitcoin, Ethereum, and the rest of the cryptocurrency market.
Yeah, absolutely. You know, the inflow figure, we actually sort of covered it, which is just my history with ETFs, you know, not just gold, but 15 years of operating in that space and building the first data system in that space is just this staircase approach that you see. And so we looked at, you know, the early flows in these Bitcoin ETFs, and if you extrapolate outwards, it's pretty easy to get to that kind of number. And maybe even easier than it looks because these ETFs are so great. You know, our ETF only charges 20 basis points, which is half the price of the largest gold ETF. It's an incredible deal. And other providers are in that zone as well. So these are great products. So I think it's easy to get to that number. The how that translates into price, there's sort of an art and a science to it, maybe more art than science. You know, I think if you look at the price returns of Bitcoin and how it trades over time, what you see is, at least how it trades since the ETF launched, you see, you know, net ETF flows gobbling up more than 100% of all the Bitcoin mined. So the ETFs have to buy Bitcoin from people who already want to sell. And you can look at, you know, sort of how old the coins are and where people have been comfortable selling historically. And I think it's pretty clear we're going to blow past all-time highs and blow past, you know, the $100,000 level, which are the two behavioral cliffs that are up next, at which point people may sell. And then it's hard for me to imagine Bitcoin stopping until it gets to this $250,000 level before there's another behavioral wall. I'd also note that, like, if you ascribe to the 4-year cycle history of Bitcoin, it's a pretty reasonable proxy to assume you get to something like 3 or 4x the past year's price. And I don't know, you have to sort of assume that the past is not, or the future is not going to look anything like the past to assume we won't get to these levels. So we can see it to get to 250K. It could get higher, it could get a little lower. As an investor, I wouldn't pick one particular number, but you have to do that as a pundit. That seems like a reasonable level. And I think we'll get there. Oh, I think if we get those numbers, we should be pleased, right? The framing is to remember that Ethereum itself is only about 25% of the combined Bitcoin and Ethereum market. So what we're talking about is more or less a market cap weighted reflection in flows. And so therefore, what matters to people is price. And while there are lots of factors that will influence how flows turn into price, size is the biggest one. So they should be, if they hit these numbers that James and I are talking about, it should be seen as a historic success. I mean, again, these would be the second most successful ETFs of all time. That's pretty good. I think some people are worried because Ethereum futures ETFs sort of sputtered out of the gate. Bitcoin futures ETFs, which launched a few years ago, did well. Ethereum futures ETFs did relatively poorly, but they really launched into the teeth of a bear market. And I think the buyer of a futures ETF is different than a buyer of an Ethereum ETF. My view is pretty simple, which is everywhere you look, if investors have a choice to buy Bitcoin and Ethereum, they end up buying both. In Europe, there are Bitcoin and Ethereum ETFs. The market's about 75-25. In Canada, there are Bitcoin and Ethereum ETFs. The market's about 75 and 25. On centralized and decentralized exchanges, you can buy Bitcoin and you can buy Ethereum, and the market's about 75 and 25. Everywhere you look, this is the ratio that people see. Many people want Bitcoin, some people want Ethereum. I think that's what we're going to see, and I think they'll be hugely successful. Now, the first few days could be weird because you have ETH, this grayscale product, which outflows, and the first few days of the Bitcoin ETFs were weird. We don't remember this, but Bitcoin's price went from 50 to 40, and everyone assumed Bitcoin ETFs are a dud. They're not going anywhere. And then guess what? They were the most successful of all time, and the price ripped to a new all-time high. So I wouldn't worry if things are fine after a few weeks. The ETH ETFs are going to be a success. We talk to advisors every day. They're interested in Ethereum. They have been for years. They love ETFs. If we're able to put those together, there's going to be interest. So yeah, that's our view. We think it's going to be successful.
In a memo sent to investors earlier this week, Hougan argues that the short-term headwinds are solely responsible for the current situation and that things should improve once they end. He wrote $8 billion from Mt. Gox, $12 billion due from Silk Road, $2 billion from Germany. That's a lot of Hougan is optimistic because they are all short-term events that should pass quickly and their effects will no longer be felt, but the tailwinds will continue well into the future. In his memo, Hougan added that Mt. Gox will distribute its Bitcoin and the US government will sell its Silk Road assets. Then they're done. Bitcoin ETPs won't disappear, and Ethereum keeps gaining popularity. Washington's crypto embrace appears to be accelerating, so the recent pullback is a gift. One-time events are suppressing what I think would otherwise be a raging bull market, but once the market digests these short-term liquidity shocks, the future looks bright. Here are more clips from Hougan's discussion.
I think that's a lot of it. I think the other piece of it is it used to be very high career risk to stick your neck out and say, I want to get exposure to Bitcoin, or I think we should get exposure to ETH. And there are periods where that seems like a terrible idea. We've all lived through these bear markets. And the number one thing that most people on Wall Street want to do is keep their jobs. And so you had this high risk of sticking your neck out. I think what's happened over the last few years with the approval of Bitcoin ETFs, with BlackRock, the largest asset manager in the world, coming into the space, with Larry Fink, BlackRock's CEO, one of the most respected men in finance, pro-Bitcoin on CNBC, is that we've taken down that career risk. It's no longer crazy or extreme to say, hey, we should probably have 2.5% of our portfolio in Bitcoin in case it continues to work out. That's now okay. And so that's started to unlock this wall of assets. And there's so much money. These institutions control 80% of the world's wealth. And that all needs to get exposure to this asset space. And they're starting from a very small base. So I think they're years and years of flow. I think on the margins, the answer is yes, but you're not going to notice because there's so much new money that's going to come into this space. So there will be a few people who have already made a 5% allocation to Bitcoin, and now they're going to change it to be 3.5 Bitcoin and 1.5 ETH. That'll happen on the margins, but it's going to be just papered over by the amount of people starting new allocations or who only dipped their toes in the water on Bitcoin and now are going to add ETH. I've told this story before, but I was meeting with the CEO of a $100+ billion advisory network. So he oversees advisors who manage well north of $100 billion. And he didn't want to invest in just Bitcoin ETFs because it's not diversified. But if he sees ETH ETFs launch, he thinks packaging them together and having a small allocation for his firm. So I think it's going to be more of that, but there'll be some competition around the edges, just like there is in traditional crypto, right? There are competition between those assets, and then there are many of us who own both, and are happy with.
Hougan has made several fun and exciting predictions for Bitcoin and Bitcoin ETFs. His analogy about the performance of the gold ETFs in the years following the launch of the first gold ETF is particularly noteworthy because of the parallels. Like gold in 2004, Bitcoin ETFs are just gaining mainstream acceptance and have performed so brilliantly in 6 short months, with only 2.6% of advisors recommending cryptocurrency-related investments to their clients. While this figure is way better than it was about a year ago, we still have a long way to go. That means more money and demand for the ETFs and the overall cryptocurrency market. Please share your thoughts on Matt Hougan's predictions for Bitcoin and spot Bitcoin ETFs, as well as your own predictions for the leading cryptocurrency in the comments section below. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and check out our other videos featuring important insights and analysis from some of the industry's brightest minds. Check out our free newsletter as well. It has free market analysis and lots of important market trends you don't want to miss. Thanks for your help, and see you next time.